What's up? We are back with another stock analysis, and today we do have a very special guest. Very excited to be here. We'll definitely be adding a lot of value to our stock analysis. So the company we're going to be looking at today is AFRM Holdings. This is a digital slash mobile commerce company, as far as I know. So they just moving money around and selling products online and mobily. So we are going to get into them, do a financial analysis, see what they've been up to, see their see their growth recently, and yeah. So if you're interested, make sure to subscribe, stick around. We're going to be getting into a lot with this company, and that's about it. So let's get into AFRM. So getting into AFRM, first of all, digital and mobile commerce. A lot of different things here. I don't really know entirely what they mean, but they give you a basic idea. So industry metrics, let's see. Active customers are set to grow set to grow very consistently over the next year or so, which is pretty good. Take rate is increasing as well. I don't know exactly what that means, but I'm pretty sure higher numbers are better. So that's what we're going to roll with. Gross volume is set to massively increase over the next year. Transaction expenses are going to increase, but not as much. At least I think not as much. Loss on loan purchase commitment. Don't know what that means. We're going to skip it, and don't know what that means either. Going to skip it. So this is a $15 billion company. So actually right in the range of basically every other company that I personally own. In my opinion, I would say $5 to $30 billion range for companies is like the best area to buy them at, because they're big enough that it's not super risky, but they're small enough that there is a ton of growth potential that you could have. And that's just what I like. So anyway, moving on. Target price at 75, long-term growth rate at 36%. We're at 47 right now, so a ton of upside expected there. We'll get into the chart in a moment. Let's look at the growth summary. So only positive numbers here for the most part. Nothing too crazy, though. I would like to see some free cash flow estimates, and unfortunately we don't have any. But the estimated sales growth is massive, so that is always really good to see. Other than that, let's get into the chart first. So this is the entire chart of the company. They went public back in 2021, it looks like, right at the beginning. Since then, they are down significantly. However, if you look, they bottomed out right around 2023. And since then, they have been on a fairly consistent rise. Now, they are at a relative low at the moment, same price they were at in basically the end of 2023 after that big rise up. Now, will they be staying at this price for too long? I kind of doubt it. But before we get into that too much, let's take a look at what their earnings are looking like and see what kind of actual growth we've been dealing with. So if this actually wants to load for me, which sometimes it does. All right, metrics recap. Let's start with that. See what we're getting into here. So I would imagine the company's growing fairly well. Total revenue. Okay. Merchant network came in above. Virtual came in above. Interest a little bit below. Gain on sales of loan came in well above. Servicing income came in a bit below. So overall, I would say positive. A little, I mean, fairly mixed, but overall, I think they beat on total revenue. Operating income came in well above estimates. The margin came in well above guidance as well. Guidance was 21 to 23%, and they hit 27. That's really good. Other than that, active merchants increased 20%. Transactions increased the same. Total transactions increased 45%. Active customers, again, 20%. So year over year, their growth is enormous. And I think we can kind of see, let's look at the 1 year for this company. So they started the year right around 35. Now they're at 47 with a high of around 80. It would not shock me in the slightest to see them hit this $80 mark within a couple months again. I know there is a recent low here and there's two, but with how good this earnings report was, You could even see here's the day of the earnings report, and the next day they increased 21%. That is massive. Let's take a look at the street takeaways, which honestly, for some smaller companies, we usually never get street takeaways. So this is a pretty nice surprise to see. So shares are up 21%. Operating income was 31% above consensus with massively increased margins as well. Revenue was 7.3% higher, record high. I don't know what GMV means, but record high beat on the estimates, which is awesome. Analysts were very positive. Only downside being an elevated premium to peers, but at the end of the day, improved margins is kind of king, at least in my opinion, especially as long as sales are growing. So either way, excellent growth. Reassured with positive gap operating income in quarter four, positive outlook on European expansion. So let's actually take a look. So first of all, if you want to read through any of this, please feel free to pause here. I'm not going to read through everything. All we really need to see here is that a bunch of price targets were raised to well over $80 a share as well, which is awesome. What this is kind of telling me is that I don't know the best word for it, but their fair value, in my opinion, is probably closer to this $80 range. And just the overall market conditions, because this is a small cap company, it's higher risk. Because the market's going down, they are suffering. Now that the market has support, it would not shock me to see them pop back up to this $80 range fairly quickly. It's bound to happen, at least I think so. So anyway, very positive on the chart here, in my opinion. Looking forward, I would say that they can definitely start hitting some of these bigger numbers fairly soon. Let's take a look at their geographic revenue and see where they are at currently. So they were talking about European expansion. Okay. See, that is massive. If European expansion is in talks at the moment and 95% of their revenue is currently in the US, that is huge. Massive areas that they can grow into. I'm sure there's demand for it just based on how well they've been doing in the US. And saying that, let's get into the income statements and see what we've been dealing with. So, sales growth is very solid. We don't have the full fiscal year for 2024 yet, unfortunately. Oh wait, yeah, we do. Why is it estimates like that? I can't stand when they do that. Ignore this first column. We're focusing on this one. So sales are massively increased for 2024. Net income is getting fairly close to being positive. The year-over-year growth is kind of pointing towards that happening soon, possibly within 2 years, positive net income. EBITDA, or I should say their operating income, is very close to being consistently positive for the year. If we look at the last 12 months of their December report, it actually is positive, which is awesome. Let's go into the quarters. I'm sure that will probably give us a bit of a better picture for how they've been doing. So, wow. Okay. Net income did go positive for the last quarter of 2024. That is outstanding. You could just see the fairly consistent growth from being negative a couple hundred million to now being positive. That's awesome. Sales are at a massive all-time high of 800 million, just under $1 billion realistically. So saying all this, me personally, I am very strongly considering a buy here. I think it looks excellent when you see numbers like this turning around very recently and you see the stock price taking a fairly sharp drop. That is almost always a really good sign, in my opinion. So, saying that, let's just see here. So, fiscal quarters, this is for December 2024. They should be reporting fairly soon. So, they should have quarter one 2025 here. I guess it's just not in the full estimates yet. But obviously we did see it. Revenue massively beat. Everything looks pretty good. So either way, considering where their stock price is and how this has been growing so aggressively, I'm viewing this very optimistically. Let's continue through the financial statements and then we'll wrap it up there. But I just want to cover everything while we're here. I'm gonna go into fiscal years for this though. So 2024, pretty solid asset growth. They're at 2 billion in cash. Okay, the debt situation is a little rough. They have $6 billion currently in debt, putting their debt to equity at probably right around 200%. So that is a little rough. Obviously, they do have a fairly decent pile of cash right now, and they are starting to see some profitability. So overall, I'm going to say that's not too big of a deal, but it's just something to take note of with the company. It could be an issue in the future. Looking at cash flows, again, mostly pay attention to this fiscal year 2024 row right here, because this is just a last 12-month estimate of their most recent quarter. So net income, again, is coming up. You can see that again in the estimates. Operating cash flows look really solid. Lot of investments being bought very consistently every year. Debt is being issued very consistently as well. However, I think we'll start to see that turn around as they continue to grow their revenue and their profitability. And also, free cash flow is increasingly positive over the past year or so as well, which is very good to see. Very positive signs here that I'm seeing basically everywhere. Financials look good. The stock price is in a really good spot at the moment. Yeah, so looks really solid. Gross margin is below where they used to be. However, in saying that, the operating margin has really improved over the same time. Same thing with net margin. Let's take a look at the last 12-month quarterly view so we could get a much better idea of the growth. So if we look here, gross margin has made a pretty big comeback. They were a little bit lower towards 83 and 84. Now they're at 86. SG&A to sales is also at the lowest they have seen in the past 2.5 years, which is fantastic. A lot of decreased costs there. Net margin is seeing 2 quarters of profitability, operating. Net margin is coming up on some profitability as well. Again, the only reason it isn't showing positive while that one quarter we did see a positive net income is because this is the last 12-month average of each quarter. So that is something to take into consideration. A lot of these numbers are actually probably a lot better in the most recent quarter, but we just can't see that information, unfortunately. But anyway, everything here pointing towards very good growth. One thing to be a little concerned about is this debt to equity, where it is fairly high. They do have a lot of cash, so I wouldn't be too concerned. But at the end of the day, it is still a concern for the company that their debt to equity is so high. And saying that, that is all I have today for Affirm. Thanks so much for watching. Let me know what you guys think about the company. Personally, I am very interested. I think it's at a fairly good range to purchase at the moment for myself. I might pick up a couple shares. We'll have to see. But let me know what you guys think. Let me know your opinions. Make sure if you're considering buying any investments, do your own research. I'm not licensed or anything like that. I'm not a professional. I just am here to inform and entertain. So let me know what you guys think in the comments, all that good stuff. And I will see everybody in the next video. Thanks for watching.